Hello and welcome to today's webinar, Rethink, Transfer Pricing Perspectives from Around the World, Navigating Through Crisis and Complexities, Spotlight Americas. Before our presenters get started, I'd like to take a moment to go over some CPE and support information with you. To receive CPE credit for today's webinar, you will need to actively participate throughout the entire program by answering at least 75% of the checkpoints that you will see on your screen. Your pop-up blocker does need to be turned off to enable the checkpoint pop-ups to appear. If you have any questions regarding the material being presented, please use the Q&A icon at the bottom of your screen. The presenters will review and answer questions as time permits. Information on group participation is available by clicking the handout icon. Should you have audio or technical issues, BDO employees can contact technical support at 888-236-9111. Alliance, international, and invited guests may contact support by calling 844-580-6963. And now at this time, I would like to turn the presentation over to Mark Shetty to introduce today's presenters.
Great. Thank you, Brittany. This is Mark Shetty. I'm the global lead for transfer pricing practice at BDO and also lead the U.S. practice. This is the third in a series of three regional transfer pricing seminars that we've been holding. Today we're going to focus on the Americas region, and we've assembled a panel of transfer pricing leaders from throughout the region. We have Hugo Amano from Brazil, Angeline Chandra from Canada, Ariel Ephraim from Argentina, Lucas Rodriguez from Panama, and Jaime Zaga Hadid from Mexico. The session today is going to focus heavily on COVID-19, and we'll talk a good bit about how COVID-19 is impacting the transfer pricing issues. We've gotten a lot of questions from our clients about how do I document transfer pricing given that 2020 is so different from any other year that I'm facing. So we'll spend a good bit of time talking about COVID-19 and how that's impacted transfer pricing across the region. We'll talk a little bit about changes in business models and how that's impacting transfer pricing. And then lastly, we'll touch on the OECD blueprint around the digital economy. So let's bring on the panel.
Okay, thank you, Mark, and hello to everybody. I think that it's important to share with all of you that the OECD is working in some specific guidelines related with transfer pricing and COVID-19, focuses in 4 priority issues. The first issue is the government assistance programs and how this topic have impacted the transfer pricing. The second issue is the comparability analysis, and for sure, all the comparisons will be very problematic as a consequence of the pandemic and its effects. The third issue that the OECD is analyzing is the best way to deal with losses and the allocation of the COVID-19 specific cost. And the fourth issue is some guidelines related with advanced pricing agreements, either closed or under negotiation. So, taking in mind this introduction, it is expected that these OECD guidelines will be ready for the public community before the year end, and we know that the working party number 6 from the OECD is working on this. Regarding the South American region and maybe Central American region, in general terms, there are not formal guidelines issued by the local tax authorities in this area related with the impact of the COVID-19 on transfer pricing. Also, I think that it's important to remember that in the financial crisis from 2008 and 2009, there was nothing neither. So it's not expected to receive some specific guidance from the tax authorities here. Nevertheless, it's very common that the companies and also the tax authorities pay attention for some guidelines generated by other tax authorities from other regions or continents. So we know that, for example, Australia, New Zealand, Singapore have issued some specific guidelines related with COVID-19 and transfer pricing. So I recommend to see what guidelines talking about. So I think that this is a very brief summary about the OECD situation and the South American and Central American situation about guidelines for transfer pricing market.
Thank you, Ariel. Hugo, can you talk a little bit about what you're seeing in Brazil as it relates to COVID and transfer pricing?
Sure. Brazilian tax authorities or Brazilian government hasn't issued any specific regulation or TP regulation in response to the COVID-19. But one thing that is creating a huge impact for the Brazilian taxpayer or company established in Brazil is the FX effect. The foreign exchange effect is, from a Brazilian, let's say, importer point of view, is creating a huge loss. And for the exporter, is creating a huge, let's say, gain, right? FX gain. As you may know, Brazil doesn't follow the OECD guidelines. So we have a completely different approach. We have a fixed profit margin and apply to fixed formulas to calculate the transfer pricing annually in Brazil. So what we are seeing this year, looking from a Brazilian importer perspective, is that companies and we are doing an exercise to try to reduce the transfer pricing impact or the transfer pricing adjustment in Brazil. So Brazil has the concept of the best method is the one with the least tax burden. So we have, let's say, 3 different methods for importation as an example. And we can use whatever brings the best result for the company. So the exercise that we are doing is to recalculate the transfer price adjustment using these different methods that are available.
Thanks, Hugo. Lucas, can you talk a little bit about what you're hearing from clients and seeing in Panama?
Hi, Mark. Hi, everybody. Well, yes, at the moment in Panama and Central America in general, we have no guidance on how to deal with transfer pricing issues for the next year. The COVID and the economic downturn that caused have affected in several ways the companies in Panama and Central America. They have suffered temporary closures, dismissal of personal payments, huge payment of indemnities and severance, the increment of bad debts, renegotiation of prices. All of these has brought several concerns on the companies. At the moment, we have no guidance on comparability adjustment, for example, how to deal with these abrupt increments of idle capacity or the sudden close down of operation, the unforeseen drop of margins due to the contract amendments. Also, we have concern, companies have concern on the effects on extraordinary government decisions. In Panama, we have no government assistance. There have been an impact on intercompany transactions, but what we have seen are some extraordinary government decisions, for example, cap on prices or policies on maximum gross profit margin for essential products, for example, for cleaning and care products. So all these decisions have an impact on some companies, especially distributors of this kind of products. So for the next year, some companies have concern on how to deal with this analysis, and I think that guidance is needed for the next year in order to the companies to perform their analysis for the 2021 mark.
Yeah, it seems like a common theme that, other than what Ariel mentioned, that the OECD is targeting some specific guidance before the end of the year. Most of the local jurisdictions really have not been able to provide any COVID guidance. Jaime, can you talk about Mexico?
Yes, thank you, Mark. Hi, everyone. Regarding Mexico, of course, as the rest of the world, Mexico was heavily impacted by the COVID crisis. There were some sectors that are suffering very much the effects, especially tourism, oil. And on the other side, of course, there are other sectors such as health and food that are right now experiencing some increase in their sales. And of course, all these distortions will have an impact once we analyze this typical 2020. Regarding the stimulus or tax relief programs by the Mexican government, I have to say that there aren't any. The Mexican government decided to focus its efforts to make direct transfers of money to the poorer part of the population. There are no tax reliefs or tax programs that could help businesses in Mexico so far. So on that regard, we are more or less on the same page as the rest of the Latin American countries. On the bright side, last week the U.S. government and the Mexican government agreed to extend the fast track agreement for advanced price agreements that was signed 2 years ago. This is a good news, especially for all the export-oriented industries that are located all along the Mexican border. Of course, this was just announced last week. We have to check the specifics and the details, but I think that's a bright spot on this COVID crisis. So far, this is the situation regarding Mexico, and of course, we are preparing to finish the year and start doing the transfer price analysis for our clients.
Great. Thanks, Jaime. Angeline, can we talk about what you're hearing from clients in Canada?
Yes, Mark. So like the other panelists have mentioned, Canadian companies are also experiencing the effects of the COVID-19 pandemic. There have been certain industries where businesses have experienced significant business losses. And, as year-end is approaching for 2020, these companies are wondering, how should they be handling their transfer pricing policy? Should they be making transfer pricing adjustments for year end? And there's been very little, information from the government on how they should be handling this on their financial statements and the basis on which they should be filing their tax return. So given what's happened to the economy, the Canadian government has provided several different government incentives for both businesses and individuals in Canada. So, just focusing on the corporate side, there are business loans that have been available to corporations. There have been wage subsidies, rental subsidies, and other programs that are similar to that. So the businesses are getting support, definitely from the government to try and get through this difficult period. However, again, there has been very little guidance on how to deal with this on the financial statement and tax return side. The only guidance, specific guidance that we do have relates to the wage subsidy. So what the CRA has said is that if a company is receiving these types of subsidies, then they cannot include that in their cost base, for example, if they're charging for intercompany services or things like that. So their transfer pricing adjustments need to be made for year end to account for these incentives.
Great. Thanks, Angeline. From a U.S. perspective, we haven't gotten any specific COVID transfer pricing guidance from the IRS. There were some responses to frequently asked questions that were issued by the IRS earlier this year. And within that, there was an example of a company that was experiencing losses. And the IRS's advice on that, which I think is very relevant for the period we're in, and in that we have a lot of companies that are experiencing these losses, was not to go in and try to manipulate the comparable set to get to a certain result, but rather that we should go in and try to explain what is causing those losses, and analyze that and document that. So while that wasn't specifically related to COVID, I do think it's very relevant for this particular time. I do want to turn the discussion to comparables and benchmarking. There's been a lot of question about how do I do that? How do I document this 2020 year, given that it's so different from anything I've done historically? Maybe if we can go around the panel again and just get some input on what you're seeing around those two topics. Ariel, do you want to start with Argentina?
Yeah, perfect. Thank you, Mark. For sure, the fiscal year 2020 will be a period of a great challenge in terms of comparability. This is sure. I think that the first step is the correct characterization of the entities. So it's very important to determine how it's affecting to the companies the COVID-19 situation. So it's important to identify the function, assets, and risk of each party, understand the intercompany transactions that the entities perform, analyze the agreements and policies that they have, and see the characterization of the entity, and the risk analysis for sure will be very, very crucial. Another important issue to take in mind related to this characterization and analysis related with the function, assets, and risk is that the tax authorities right now have more information than in the past. As you all know, in Latin America, as well as in other jurisdictions, the tax authorities have information that they gather from the local file, the master file, and the country-by-country report, and this information helps to the tax authorities to understand how the companies have to be characterized and how these companies have to deal with the risk. So I think that this is a very important point to take into account. And finally, when we talk about the comparability analysis, I think that it's important to divide the issue in two different things. The first one is how the tested party is affected as a consequence of the COVID situation. So we can see that there are some companies that have a decrease in revenues, decrease as a consequence of sales prices or volumes. There are also some companies that have an increased cost for maintaining inventories, some companies that support high costs for idle capacity, or some extraordinary expenses as a consequence of the COVID-19. So all of these issues for sure will have to take in mind and maybe generate some comparability adjustment. In the size of the comparable companies, I think that it will be very difficult to obtain comparable companies this year. Maybe some companies will go out of business due to the pandemic situation, and some companies maybe will have operating losses. So you have to be very carefully with this reject issue. Another issue, I think that it's related with the timing issue for the comparability. As you may know, in Argentina and also in all Latin America, it's very common that you perform the comparison the 1 year for the tested party and 3 years for the comparable companies as an average. So if you will use the 2020 for the tested party and a 3-year average for the comparables, the comparison will be not reliable because the tested party will be affected by the pandemic situation, but the comparable will be affected only 1 year and not the complete period. So I think that these issues have to take in mind. Also will be important to pay attention to the situation into the range, but I think that the rest of the panelists will continue talking about this, Mark.
Mark,
I
we
think
can't
that
hear
you are mute, Mark.
Just a comment on the 3-year average. We've had the IRS typically looks at a 3-year average. We've already had taxpayers approach us about looking at just a single year, 2020, compared to their actual results. So I think there is going to be some differences in the way we kind of rethink this going forward. Hugo, can you talk a little bit about how transfer pricing compliance may change in Brazil in 2021?
Sure, Mark. Yeah, so before talking about this, I just explore a little bit on what I mentioned in the introduction. So Brazil has a different approach to comply with the transfer pricing. So we call it a transfer pricing calculation rather than a study. Because we it's not that simple, but we simply apply the fixed formulas and fixed profit margin in the products that the company imported into Brazil, talking about importation. So we have an approach to our legislation requires that we calculate, or we prepare the calculation in a product by product basis. So meaning that if a certain company import 500 different goods or raw material into Brazil, 500 different calculation has to be provided or has to be prepared. So as I mentioned, so we have 3 different methods to calculate the goods on importation. So basically, we have the resale minus profit, the cost plus, and the method, the third method that we call PIC, which is similar to the cup method, right? So the good thing about Brazilian TP is that we can pick and choose the best method for each of the product that the company imported into Brazil. So taking the 500 items as an example, so we can apply the resale minus profit to 100 items and the PIC or the cup for the other 100 items and the cost plus for 300 different items. So we can just prepare the calculation. So the 3 different calculations for each item, and pick and choose the best, understand the best as the one with the least tax burden to use as the method in Brazil. So just a comment. Ariel mentioned about the information that the tax authorities has. Brazilian tax authorities also have, besides the information from CBCR and the local file and the TP itself, as everything in Brazil is controlled electronically, so electronic invoice, electronic returns. So Brazilian tax authorities have the whole information from who the company is importing from, who is the customer, who is to whom we are selling to. So they have access to all this information. So it is very important to comply with the TP rules in Brazil, as the penalties and adjustment could be highly impacted. And in a year like this, we don't want to have this type of issue, right?
Thanks, Lucas. What changes are you expecting to see in Panama this year?
Well, Mark, I think that comparability adjustment will be the main or one of the main challenges for transfer pricing analysis for the next year. what we have got used maybe won't be very useful for the analysis of the 2020. As we mentioned before, the lack of guidance on comparability adjustments will be an issue because at the moment we have any guidance not only from the OECD but also from our tax administration, and concerns on how to deal with some issues. For example, the increment of idle capacity is a concern on companies not only in Panama but also in Central America. Of course, as we mentioned before, the effects on extraordinary government decision will be an issue for the next years. Concerns on whether the inclusion of comparable companies with operating losses, if there will be allowed, is another concern, another issue for the next year. Because if we see the experience, our tax administration, and not only in Panama but in Central America in general, companies with operating losses are not allowed general. But this extraordinary year, and I think that operating losses for companies will be normal for a great industry, for a great quantity of companies. Also, by accepting companies with operating losses, other issues, but under certain circumstances, the interquartile range will be negative. And this is another concern of that our tax administration will accept an interquartile range negative. Another issue is the operating losses shall be well documented. Any temporary disclosure, dismissal of personnel, severance, bad debts, any costs that have caused operating losses should be well documented. And of course, there are other concerns. For example, the use of alternative techniques to test the arm's length principles in case where historical data are the only data available, or there are unreliable current data. We think that statistical techniques could be useful to perform adjustments, and concerns into what extent our tax administration will accept these techniques is also a concern for companies. And regarding the documentation, what should be gathered and the evidence that taxpayers need to document the operating losses for the next years, because COVID and the economic downturn has brought intercompany contractual renegotiations, and it's also should be well supported and documented the reasons of this renegotiation, the existence of force majeure clause and clauses that allow renegotiation of these conditions, compensations. Any compensation should be in line with the functions profile of the companies. And of course, any amendment of contract should be in line and consistent with the arm's length principle and market conditions. So we think that the main concern is how to document for the next years the reason of the operating losses and the comparability adjustment on comparable companies, because in Panama, usually companies from US and Canada are used, and the COVID and the economic downturn have impacted in different ways that in Panama. So I think that this will be the main concern for the next year.
Yeah, there seems to be a common theme that we have to really rethink how we're doing transfer pricing for this year, that it's so different from anything we've seen in the past, that we can't just rely on doing things the way we've done them in the past. Jaime, what are you expecting in Mexico?
Well, thank you, Mark. In Mexico, as I mentioned before, so far we haven't received any guidelines on how to deal with these new challenges on a transfer price aspect. However, dividing the main things that we as transfer price experts need to address. The first one is, especially when dealing with profit-based methodology, we have to be very careful on how to document these extraordinary transactions or one-time transactions, such as layoffs, which in Mexico, unfortunately, we have suffered a lot, or extraordinary operating costs just to be able to continue operating under these circumstances. All these adjustments, of course, are allowed under our legislation, but that's not to say that they don't need to be perfectly documented, especially if we take in consideration that because of this situation, we will face clients that are going to present new transactions that were not in place the previous year, such as loans, just to maintain these subsidiaries operating in Mexico. These loans will be, of course, closely watched by the tax administration, and we need to support that with documentation and business purpose for each transaction. Last year, Mexico approved legislation regarding the possibility for the tax administration to recharacterize some transactions, especially the ones that are with related parties. So under these circumstances, I think documentation will be crucial. On the other side, when dealing with how are we going to do, what are we going to do with the comparables, it's important that Mexico hasn't issued any guidelines if we need to use 3 years average or a single year to make the comparisons. Normally, we have used the 3-year average, but in some cases, we will have to use single year. Like I said, the government hasn't issued any guidelines, but in some cases we will have to use it, and again, we have to document it very, very strongly. Finally, just to complete my comment regarding the fast track agreement, we need to know if both administrations, the US and the Mexican administrations, are going to be sensible of the situation for this year. We don't want to receive the proposals from the Mexican government showing us some unrealistic margins in order for our clients to opt for the fast track. We are confident that they are aware of the situations and that the margins that are going to offer our clients to proceed with the fast track APAs will be logical and consider these circumstances. Other than that, this is the situation in Mexico. Back to you, Mark.
Great, thank you. So, Angeline, I know Canada already requires a single year analysis, so we don't have that issue of the single versus multiple year. But what changes are you expecting to see within Canada?
So in Canada, the transfer pricing documentation requirement is an annual requirement. And, a lot of companies going through the COVID crisis right now, certain industries are highly affected. And we may have a lot of companies that are experiencing losses, although they're operating as a limited risk distributor or a captive service provider or something like that. And so one of the issues that we have on the comparable side is timing. So, for 2020 year ends, the data will not be available for Canadian companies until probably early April 2021. And so, businesses are wondering, well, how are we supposed to know where we're going to fall within that 2020 range for comparables? And so this is a challenge. What we've been advising companies to do is to ensure that their Canadian transfer pricing documentation provides a lot of detail on these losses. So, having a paper trail that in the future, if you have a tax audit by the CRA, if you have a proper paper trail to explain, how did these losses arise? Why? Do you have any email correspondence, any sales reports, things like that? This type of information, I think, is really important to incorporate into the transfer pricing documentation to kind of explain the economic and business circumstances around what the companies are experiencing this year.
Great. Let's go to our first polling question. I'd be interested to see what the audience is seeing around COVID. So the polling question is, do you plan to or have you already made changes to your current transfer pricing policies to reflect changes in your business resulting from COVID 2019? We'll give it a few minutes for everybody to answer those questions. So the responses are yes, adjusting transfer pricing policy and or adjusting pricing to reflect changes in the business within comparable companies. No, continue with existing policies. Or 3, still determining if changes to transfer pricing policy and pricing is needed. All right, we still have people voting. All right, let's see what the results look like. Okay, so we've got almost 2/3 saying that they're still determining if changes to the transfer pricing policy or pricing is needed. That's not surprising to me. I think in discussions with clients, we've had a lot of discussions and there's been a lot of talk about should I make a change before the end of the year. But a number of them, I think, are still determining what to do before the year's out. All right, let's turn the discussion. If we could go back to our panel, I'd like to turn the discussion to just changes in business policy. So here in the U.S., I think with the changes in the U.S. tax law, we were already having a number of companies looking at changing their supply chains. With COVID, we've now, I think, introduced another element where companies are coming and saying, we're interested in onshoring to control that manufacturing within the U.S. I'd like to hear from the panel just what you're seeing as related to any kind of relooking at business models or changes related to COVID or otherwise. Ariel, do you want to comment on that first?
Yeah, thanks, Mark. I think that the answer for the polling question it's very related with the answer that I usually receive from different companies here in the region. I think that all or a lot of companies are waiting and see what will happen in order to make some change in the value chain or in the business activity. I think that, first of all, it's important to remember that in Latin America, there are principally permanent establishment or subsidiaries from multinational enterprises group with the ultimate parent companies located abroad. So this is a fact and this is a context. As a consequence of that, the transactions with related parties from the subsidiaries in the region represent a material percentage of the total business carried out. Also, it's important to remember that with some differences, the jurisdictions or the countries of the regions were dealing with the pandemic situation and they were suffering different situations. The first one is the preventive and mandatory social isolation. In some countries, it took maybe some weeks, but in other countries, it took more than 1 month. And also, it's important to remember the big recession that they have to suffer. So, taking in mind this context, the companies in the regions are trying to survive. So, at this moment, the companies are not doing any change in the value chain, but they are analyzing different alternatives. So, companies are considering how it's affecting to the legal entity the coronavirus situation. As I mentioned before, understanding what the intercompany transactions are, identify the function, assets, and risks of each party, and see the transfer pricing policies in place in order to determine if it's necessary to do any change in the agreement or to use any clause or revoke clause or termination clause. So the companies, I think, that are related with the answer that we see, wait and see.
Hugo, are you seeing companies in Brazil look at changes in their business models?
Yeah. So, Mark, what we are seeing in Brazil is, let's say, an increase in the M&A activities. So we have like clients that are expanding its position in Brazil by acquiring another companies or another activities that complement the existing ones. So we are seeing this movement because the crisis generate opportunities for others, right? And as FX, let's say, is caused a great effect in Brazil this year. People say that Brazil is currently cheap to invest into Brazil. And Mark, I'd like to make a few comments related to the Brazilian transfer pricing alignment into the OECD. So this is, let's say, this is something that is going to happen, right? So Brazilian tax authorities and the OECD they are working together on this in a project for 2 or 3 years already. And this is something that is going to happen. There's no way back. But the $1 million question is when it's going to happen, right? So we have no idea. There's no draft legislation yet. And it's not necessary. So the alignment of the Brazilian legislation is not necessarily related to the acceptance of Brazil into OECD. So people say that we may adopt the OECD legislation or the OECD guidelines voluntarily, independently if we are accepted or not in the OECD. So we know that there are a lot of work to be done within, let's say, our internal legislation first. For example, royalties are out of the scope of the transfer pricing legislation currently. But if we align to the OECD guidelines, this is something that has to be addressed before. So we have also an ongoing tax reform discussion related to income tax, corporate income tax, and VATs. So that may take the rest of this year and part of the next year. So I believe that this is a personal opinion that we will not have any draft legislation of the transfer pricing, of the alignment of the transfer pricing to the OECD guidelines before, let's say, the end of the next year. So it's a draft legislation and we have no idea when it will be put in place.
Great. Thanks for that input. Lucas, any comments on supply chain changes as it relates to Panama?
Well, Mark, in Panama, we are in line with the answer that you are seeing right now. Companies are still waiting before determining any change in their transfer pricing policy or in transfer pricing restructuring, the business restructuring. However, what we have seen from clients that they are analyzing options regarding the business restructuring and analyzing options, for example, by changing their characterizations. For example, in Panama, we have a good bunch of our clients that are engaged in distribution and in the export activity. And they are considering changes in their functional profile, for example, from full-fledged distributor to commission agents or limited distributors in order to move to a less risky profile, especially inventory or credit risk. But again, it's still waiting before determining any change. And we think that for 2021, we'll see a lot of M&A activity regarding this restructuring, Mark.
Great. Jaime, what are you seeing in this area as it relates to Mexico?
Well, in Mexico, of course, we will have companies that, like Ariel said, will just are struggling to survive under these circumstances, and others, like Lucas said, that are on the sidelines waiting to see if there's merit to make any changes on their supply chain. However, we have to say that previous to this pandemic, Mexico signed with the U.S. and Canada the free trade agreement, and that in itself was moved some companies before the pandemic to rethink their value chain. So we were in the process of some companies looking for advantages of bringing some of their operations here in Mexico, looking for cheaper and better costs. However, the pandemic came, and I think many of these plans and projects, even if they were supported by the recent signature of the agreement, have remained on hold until some clarity comes in the future.
Great. And Angeline, Canada, what are you seeing there?
As the other panelists have mentioned, I've seen an increase in M&A activity in Canada as well. So, various different reasons for that. Some businesses and industries have been in dire straits, and this gives opportunities for mergers and acquisitions types of activities. There's also a lot of succession planning going on with certain businesses. And, the biggest thing that I think is important to kind of, remind companies is that when you're going through the due diligence process, it's important to consider the transfer price, risk assessment as well. And so typically, in the past, in due diligence, it's common to look at historical financial statements, in order to determine a value for a business. But I think, with today's economy, it's also important to consider what's going to happen in the future in terms of, potential profits and, other effects on that particular industry. And really, the future and what's going to happen in the transfer pricing policies, policy that you're going to utilize, it should be affecting your purchase price as well. So it's very important to keep this in mind during the due diligence process.
Great. Let's go to our second polling question, see what the audience is seeing around this issue of changes. So the question is, are you rethinking changes to your current business model as a result of COVID-19, for example, supply chain, employee mobility, digitalization? The three choices are no significant changes anticipated, yes, making changes or expecting to implement changes going forward, or 3, still determining if changes to current business models are necessary. So we'll give everybody a chance to vote and see what the results look like. All right, why don't we take a look at the results? Okay, so we've got almost 20% saying no significant changes anticipated, about 30 saying yes, making changes, and then about 50 still determining if changes to current business models. So I think that reflects some of the comments that there is some M&A activity going on in that second bullet. And then the last comment, I think there were a number of people that said that we may be some kind of waiting to see how this pans out, and then changes may occur. All right, let's move to our last topic, and that is the OECD blueprint that's gone out on the digital economy. Those of you that's followed this, that's been pushed back. So there's the OECD has asked for public commentary around this that is due in by mid-December. But the date to come to a final agreement has been pushed to mid-2021. And as a result of that, or in the meantime, we have a number of countries that have unilaterally put digital service taxes in place. Angelina, I know there's been some recent developments on that front in Canada. Do you want to talk about that?
Yes, Mark. Yesterday in Canada, we had a federal budget update. And what we've learned is that Canada is going to go ahead with the digital tax on corporations. And that is going to be effective for January 1st, 2022. And the other thing is, so we have a GST, which is a type in a harmonized sales tax as well. And companies, digital companies are required to register for the GST, and that is going to be effective as of July 1st, 2022.
Great, thanks for that update. I think as far as the U.S. view on this, I think generally the comments coming out of Treasury has been that they feel like the large U.S. tech companies are really being singled out on this. So they have been participating in the OECD negotiations. Ariel, I guess just from a Latin American perspective, what's the view on this generally, kind of as this plays out within the OECD discussions?
Yeah, only some short comments because I think that we have a short time. But I think that it's important to remember that this is related with the BEPS Action Plan number 1, the digital economy. And it's also important to take in mind that from the Latin American countries that participate in the BEPS, we can find Mexico, Chile, Colombia, Brazil, and Argentina. So it's expected that these countries include something related with this because they were actively participating in the BEPS action plan. Another important issue to share with all of you is that the Pillar 2, I think that it's easier to obtain the necessary consensus and to be incorporated after that in the local regulations. But the Pillar 1, I think that will be more complicated to obtain this consensus among the different jurisdictions. Right now, the situation in Latin America is that you can find some unilateral legislation or approach. For example, you can find some issues in Colombia, in Chile, in Argentina. In general terms, we talk about or some issues related with the value-added tax that include the digital economy, or some issues related with the turnover tax that include the digital economy. And also, I think that Mexico was a proposal to introduce a digital service tax, and there was a draft legislation, but we have to see what will happen about this.
Great. Let's go to our last polling question, if we could pull that up. All right. So the question is, which of these is expected to have the most significant impact on your company? Pillar 1 amount A, Pillar 1 amount B, Pillar 2, or the digital service taxes? And we'll give it a minute to let everybody vote. All right, a couple votes still coming in. All right, let's take a look at the result. Okay, yeah, I think no surprises here. Digital services taxes, because I think it's directly impacting those countries that have enacted them, as well as some of the U.S. companies that would be, the generating the revenue related to those service taxes seems to be the immediate issue right now that's impacting companies. It's interesting that Pillar 2 is at 18%. So Pillar 2 is really putting a minimum global tax regime in place, similar to our U.S. GILTI. So interesting that that's as high as it is. We are just about out of time, so we won't, unfortunately, won't have a chance to take questions. To the extent that you did submit a question, we will answer those individually and get back to you with our responses. But with that, I'd like to thank all of the panelists for joining me today. I thought it was a really good discussion, and hopefully everybody walked away with a good understanding of what's going on within the region and some practical advice on how to handle some of these issues. I'd like to thank all the audience that was able to attend today, and I'll turn it over to Brittany for some just last minute logistics on TP.
Thanks so much, Mark. And thank you everyone for attending today's webinar. CPE will be issued within 48 hours of this presentation via email. At that time, it will also be available under your profile on bdo.com. Click on the handouts icon on your screen for more information. You can leave the course at any time. Thank you and have a nice day.